To the market, shall we? Mike Lee joins us this morning. He's watching the market for us. All right, Michael, we get inflation data tomorrow. Big deal. What happens if to the markets, that is, if inflation stays high, say at the 6% level? What happens to the market?
Stuart, I'm looking specifically at month-over-month core. So if that comes in hotter than 0.4%, which is the expectation for tomorrow, and we start to see evidence that inflation is reaccelerating, I think a lot of things become unglued because the Fed not only will have to keep interest rates high, there will probably be the probabilities creeping up that the Fed will increase interest rates additionally from where they are now, which is really not in anyone's expectations at the moment. So it could get very, very ugly if it comes in super hot. And then the flip side is if it comes in cool, you could probably see a nice little rally tomorrow.
I believe you're buying gold. That's your go-to investment vehicle of the moment, right?
Yeah, well, gold is knocking on the doors of all-time new highs. And so assets that make new highs usually continue to make more new highs. And why is this happening? Why do I like it specifically right now? Well, we have a bank contagion on our hands, and the Fed, with the two of the top three largest bank failures, more in gross assets of bank failures just this year than all of the 2008-2009 crisis. And what has the FDIC and the Fed come in and done? They've printed a bunch of money to try to solve the problems. And the difference between now and then is we're looking at a deposit flight. As you pointed out at the top of your show, money markets and short-term interest rates are close to 5%, while most people are getting next to nothing in their checking and savings accounts. And so as those deposits walk out the door, it becomes very difficult for a lot of banks to stay in business, let alone lend money. So I think we're going to see a lot more bank failures. If the Fed has to come in and bail all these out, it's a good time to own some gold.
Man, you used to be the Super Bowl, and you're not now. Mike Lee, thanks for being with us.
Sorry.
No worries. The yield on the 1-month T-bill, 1 month, 5.359%. How about that? Mike, thanks very much. See you soon. Later today.